Hello everyone, welcome back to our series of Simplifying Investments. Today we are going to answer some questions in the basis of a Q&A format. These questions have been collected by all our investors who have been posting queries for us, and let's try answering them one by one. So how do we choose a mutual fund based on financial goals? I guess the key answer to this is that what you need to do first is bucket your goals into short term and long term. Within short term, you need to see what are the goals that will happen within a year, between 1 to 3 years, 3 to 5 years, and for a longer term, which is 5 years and above. A very simple logic to this is that anything which is less than a year and which has to be addressed within a year, you have to go with minimal risk. While you're trying to optimize the return in this aspect, you need to choose instruments which are better than, say, your regular savings account. You have some debt funds, some arbitrage funds which will help you generate that. And the key aspect again over here would be to preserve the capital as much as possible so that you don't falter on the goal that is in the near term. For goals which are there in a horizon between 1 to 3 years, I would still recommend a combination of debt funds and hybrid funds to get a flavor of equity, maybe conservative hybrid funds more than the aggressive hybrid funds. This will in turn help you generate higher IRRs and also help you achieve a particular goal in this time frame. We could also look at choosing some corporate fixed deposits to add to this component so that you make some higher returns as well as manage risk in an optimal way. Longer term based goal, I would like to add risk to the portfolio. When I say risk, I can be a little aggressive in choosing, say, some bit of small caps, some bit of mid caps, and a combination of large caps as well. But the mantra over here is to stay invested over a longer period of time and to keep investing consistently. The most common mistake which we see these days, that everybody is chasing returns. Everybody is looking at returns and everybody unfortunately is looking at past returns. Over here at Gravitas Investments, we follow a very scientific approach in where we try to filter performances over a longer period of time. We dissect these performances on an annual basis. We see which fund manager is capable to take us through different market situations, and I guess the best way to avoid these things is to approach a financial advisor or an expert who has little knowledge more than what you have. Do not follow trends, do not follow things that are going online, going on board. I feel that you should approach people who have a scientific approach in choosing fund managers who are able to look forward, look at the market dynamics and choose stocks. And another thing is that we should not, the age old saying goes that we should not be parking all our investments in one basket. I guess diversification is the key to safeguarding your returns. You also have some multi-asset classes, multi-asset mutual funds, which helps us in this diversification and also gives you a glimpse of an investment in gold, debt, equity, and some bit of derivatives. So yes, I guess chasing returns is one of the biggest mistakes one should not make. Like I just said, the best way to approach is to approach a person who's researching on all these funds. If you look at the number of mutual funds and the number of PMSs that are there present in the market, it is beyond our capacity to sit, for a person who's not doing this full time, to sit and analyze which is the best one. Typically, I've seen a lot of trending PMSs where investors go and invest their money. Maybe these fund managers do not have all the experience. I'm not saying they're bad or something, but I guess you need to take your steps very carefully. Another thing is that you should only be investing in PMSs once you have developed that risk appetite. We should look at both these aspects only after a thorough analysis on all the parameters. And there are so many parameters like sharps, alphas, betas, autonos, capture ratios. You have so many other financial ratios which will help you in coming closer to picking up a right fund manager.